As war rages in Ukraine, the ruble is plunging and markets at home are reacting to the conflict. Mike, many investors don't know what to make of how they'll be affected right now.
Investors clearly are unnerved about the idea that Putin has invaded Ukraine. You look at that being right on the doorstep of some of these NATO countries, and you can understand why investors here in America and international investors are unnerved.
Senior analyst Mike Larson, editor of Safe Money Report, says this is the time to employ every safe money strategy available.
You have the Federal Reserve that is on the cusp of starting a rate hiking cycle. It's not like rates are going to go instantly extremely high, extremely quickly, but you're going to have what used to be a tailwind, falling interest rates, zero interest rates, and so on for the markets. You're going to an environment where they're going to be a little bit of a headwind. Investors like nothing more than easy money, but that's caused an inflation problem for this country.
Uncertainty in the East and shifting monetary policy in the U.S. is creating a more volatile market, one with investment opportunities.
You're seeing things like commodities, wheat, corn, oil, copper, gasoline, and so on, all the kinds of commodities that are surging in price, even more than they already were rising due to the general inflationary environment.
Russia and Ukraine account for about 1/4 of the world's grain exports. Let's talk about the energy sector. Rising prices was already a trend we were seeing.
Energy was already in a behind-the-scenes bull market for many, many months. Some people say, oh, it's just because of Putin. And no, that's amplifying and accelerating a trend that was already in place. There was already a picture where growth was strong enough that demand for energy was strong, especially coming out of things we couldn't do during the depths of COVID, travel and so on.
And now the U.S. has banned Russian oil imports to take a tougher toll on the Russian economy.
And that's going to lop off hundreds of thousands of barrels a day. And that's why this bull market in energy has been so consistent and persistent.
Crude oil prices are soaring and ETF XLE is climbing. It's not the only sector benefiting in this climate. Prices are surging for so-called safe haven assets. The precious metals market is getting a big boost right now. Tell us how you see the price of gold playing out over the next few months.
What you want is stuff that's powerful on multiple reasons, whether it's inflation, whether it's the purchasing power defense, whether it's geopolitical uncertainty. All of those things have kind of aligned behind precious metals, and that's why I like that sector very much. You want to own things like gold, silver, and mining shares.
Mike recommends the Van Eck Gold Miners ETF, which is on the rise. Gold's all-time high was nearly $2,100 per ounce in 2020. It's currently inching toward that.
There's some resistance, technical resistance in this area, but if we are able to punch through that, and that seems, in my opinion, pretty likely, there's not really a lot standing in the way of gold heading up to its old high.
He also says in this low-yield investing climate, consider the options market to generate income. As editor of Weekend Windfalls, he helps investors earn up to $1,000 each week by using high-quality stocks to sell options. He's about to unveil a masterclass to teach investors how to trade successfully on their own.
Based on 3 years of testing and more years of actual experience here at Weiss Ratings, the exact strategy I teach in this course has delivered a nearly 99% win rate, mostly thanks to a critical tactical advantage we have that I'll give you in detail later on. In my view, it's the single best way to pull steady, rich returns out of an unsteady market.
You can sell options. You'll take in premium. Basically, you're selling stock insurance, for lack of a better term. A lot of people, they may own a stock that they're afraid is going to go down. So they'll buy a put option, which allows them to sell that stock to somebody else at a certain price for protection. But as an option seller, you're basically providing that insurance, that protection. And you collect premium upfront, just like a car insurance company or a homeowner's insurance company would for insuring your car or your house.
I've been analyzing and investing in the markets for a quarter century, and so far this is the best way I've found to reliably generate sustainable income week after week. And that's both when the economy is thriving and when it's not doing so great. See, using my strategy, you don't execute this with risky penny stocks or companies that go up and down for no reason. You strictly focus on blue chip, high quality companies that any other day you'd be happy to buy and hold. That way your money is still going to work for you. And it makes it possible to turn an initial loss into a nice profit on top of the income you make along the way.
It's a different way of looking at the market. It's a different approach that's designed to put the odds in your favor versus working against you. And, we're pretty happy with the results.
Solid results, no matter how market forces are evolving.
Sometimes it's good things that are impacting your portfolio. And unfortunately, sometimes it's bad things. But regardless, you have to try your best as an investor to not only protect your capital, but to build your capital while you can. You have to find ways to build your nest egg when inflation is trying to take that nest egg and shrink it. So that's why so much of what I focus on is income, whether that's in dividend paying stocks or even things like the options market.
It's a bit of consistency in the midst of chaos. Senior analyst Mike Larson, always great to get your insight and takes on things. Thank you so much for your time today.
Thank you, Jessica. Have a good one.